The financial position of Harris Limited on the 1st of the 1st, 2006 is shown in the following balance sheet. So you've got all of your assets and liabilities there. The following transactions took place during 2006. In January, so on the 1st of the 1st, 2006, Harris Limited revalued land and buildings at €520,000. This valuation included land now valued at €80,000. February. On the 1st of the 2nd, 2006, Harris Limited bought an adjoining business which included buildings €300,000, vehicles €50,000, stock €20,000 and creditors €30,000. The purchase price was discharged by granting the seller 290,000 shares in Harris Limited at a premium of 20 cents per share. In March, goods previously sold by Harris Limited for €15,000 were returned. The selling price of these goods was cost plus 20%. Owing to a delay in returning these goods, a credit note was issued showing a deduction of 10% of invoice price as a restocking charge. April. A vehicle which cost €15,000 was traded in against a new vehicle costing €34,000. An allowance of €10,000 was made for the old van. Depreciation to date on the old van was €4,500. So in May, received a bank statement on May 31st showing a direct debit of €3,000 to cover advertising for the year ended 31st of the 5th, 2007, and a credit transfer received of €2,500 to cover 10 months rent in advance from May the 1st. In August, a payment of €700 was received from a debtor whose debt had been previously written off and who now wishes to trade with Harris Limited again. This represents 70% of the original debt, and the debtor had undertaken to pay the remainder of the debt in February 2007. In December, the building's depreciation charge for the year to be 2% of book value. The depreciation charge to be calculated from date of valuation and date of purchase. The total depreciation charge on vehicles for the year was €20,000. You are required to record on a tabular statement the effect that each of the above transactions had on the relevant asset and liabilities, and ascertain the total assets and liabilities on the 31st of the 12th, 2006. So your solution should look something like this. So that's the marking scheme there for this year, and in an exam you will have this layout given to you, so no need for rulers or anything like that. So step 1, as always, lay out your tabular statement. So if you want to pause the video there and write out the figures from your balance sheet into your tabular statement as seen on the screen. Okay, so step 2 is to record all of the transactions. So January, on the 1st of the 1st, 2006, Harris Limited revalued land and buildings at €520,000. This valuation included land now valued at €80,000. So we want to look at the land and buildings €520,000. So at the start of the year, they were worth 414. So we need to add 106,000 onto the land and buildings there to make it €520,000. What we also need to do is unwind any depreciation that had previously been charged on that. So 12,420 needs to be added back into the depreciation. So now the depreciation is nil. Now we've got 118,420 assets here. We have no liabilities. What do we have to do? So you know in your question 1 in Finance By, if you revalue land or buildings, you have to create a revaluation reserve. So down in your liabilities, you write revaluation reserve, and it's 118,420 there. So that is January done. What you need to do before you move on is make sure that you've underlined this valuation included land now valued at 80,000. Underline that, draw a line down to your December adjustment, which is asking you to depreciate buildings. So make sure you do that so that you do not forget that there is land 80,000 included in that valuation. The next month, February, so on the 1st of the 2nd, 2006, Harris Limited bought an adjoining business which included buildings €300,000, vehicles €50,000, stock €20,000 and creditors €30,000. The purchase price was discharged by granting the seller 290,000 shares in Harris Limited at a premium of 20 cents per share. So what we need to do here then is add 300,000 into our land and buildings, add 50,000 into our delivery vans or vehicles there, add stock 20,000, and then down to your liabilities add 30,000 to your creditors. So that's that first sentence done. Then it says the purchase price was discharged by granting the seller 290,000 shares in Harris Limited at a premium of 20 cents per share. Now, if you look back at the balance sheet, it says that our shares are €1 each. So therefore that is 290,000 share capital, and at a premium, so a charge there, 20 cents, so 290,000 multiplied by 20% is €58,000 there. So our liabilities in total here are 378, but our assets at this point are only 370. So therefore, we have to create goodwill there in our assets. So we write down goodwill and we put €8,000. What is goodwill? Goodwill is the established reputation of a business that has just been bought. So it is an intangible fixed asset. So that is February. Moving on then to March. So goods previously sold by Harris Limited for €15,000 were returned. The selling price of these goods was cost plus 20%. Owing to a delay in returning these goods, a credit note was issued showing a deduction of 10% of invoice price as a restocking charge. Okay, so Harris previously sold goods for €15,000 to a debtor. The selling price of these goods was cost plus 20%, so 15,000 is 120%. So when the debtor returned the goods, Harris gave them a credit note for 90%. Okay, so they took away a deduction of 10% because of a restocking charge. So 15,000 was 100%, 10% was deducted, so only 90% was returned to the debtor. So add the cost price of the goods back to stock. So the selling price is 15,000 divided by, that should say 1,000 there, 15,000 divided by 120 multiplied by 100 is a cost price of €12,500 being added back to stock. Now, the debtors are going to get a credit note for 90%. Okay, so 15,000 multiplied by 90% is 13,500. So that is, our debtors are going to reduce by 13,500 and not the entire 15,000. So the profit that would have been made previously on those goods would have been the 15,000 minus 12,500, which is 2,500. But because we're only giving them 13,500 back, so 1,500 has been charged as a late fee, our profit is only actually being reduced by €1,000. Okay, so the profit was 15 minus the 12,500, which is the cost price of the stock. So the profit was 2,500, but 1,500 was being charged as the restocking charge. So the profit is only being reduced by €1,000. So our assets and our liabilities are both minus €1,000. So then April. A vehicle which cost €15,000 was traded in against a new vehicle costing €34,000. An allowance of €10,000 was made for the old van. Depreciation to date on the old van was €4,500. So what we can do here in April then is we can minus the 15,000 from vehicles and then add the 34. So minus 15 plus 34, or in total it is minus 19. Okay, then what we have to do is we have to unwind the depreciation that had been previously charged on that delivery van. So it says in the last sentence here that depreciation to date on the old van was 4,500. So therefore, we want to get rid of that 4,500 that was previously charged. So 4,500 added back into depreciation delivery vans there. Now, then what we want to do is we want to think about how much was taken out of the bank account to pay for that new van. So the new vehicle cost €34,000 okay, and the allowance of €10,000 was given on it. So therefore, check for the net amount must have been €24,000. So into the bank there, we put 24,000. That 24,000 is increasing the bank overdraft that already existed there, okay? And then what you have to do is we have to think, well, was there a profit or a loss made on the sale? So the vehicle had cost 15,000. The depreciation to date was 4,500. So therefore, the net book value at time of sale was €10,500 there, and there was an allowance of €10,000. So therefore, made a loss of €500. So the profit and loss account is being reduced by €500 because they made a loss. So overall, we have 23,500 in the assets and 23,500 in the liabilities. So that is April done. The next month we have is May, and this is our month where we get the bank statement. So received a bank statement on May the 31st showing a direct debit of €3,000 to cover advertising for the year ended 31st of the 5th, 2007, and a credit transfer received of 2,500 to cover 10 months rent in advance from May the 1st. Okay, so we will first of all look and adjust the bank figure. Okay, so the direct debit of 3,000 to cover advertising, that is an expense, money coming out of the bank, so therefore that is adding to the bank overdraft. Then we received 2,500 to cover 10 months rent in advance from May the 1st, so therefore rent coming into our account is going to reduce the bank overdraft. Now we have to decide where else are we going to put these items. So if we have, okay, advertising that is for the year ended 31st of the 5th, 2007, we're doing 2006 here, so that is going to be advertising prepaid. In our assets, we already have advertising prepaid, so we're going to put €3,000 into our advertising prepaid up in our assets. And then let's think about the rent received, the 2,500. Now, that is to cover 10 months rent in advance from May the 1st this year. So for this year, it's going to include May, June, July, August, September, October, November, December. So that is 8 months for this current year. So that means there is going to be 2 months prepaid for next year. So therefore, rent receivable prepaid at the end of the year, that is a liability. So I throw the 2,500 down into the rent receivable here. Then what we want to do is we want to do the 2nd December column. So that is all about our expenses or anything receivable, and just finishing off our bank month. Okay, so we do the bank month and then we go and do the 2nd December column. So what we want to do here is say what was attributable to the current year. So if we take the advertising first of all, the advertising 3,000 there is for the year ended 31st of the 5th, 2007. So that is 5 months for next year. So therefore 7 months of this 3,000 is for the current year. So 3,000 multiplied by 7 over 12 is 1,750. Okay, so 1,750 plus the advertising prepaid at the start of the year, 1,350, is for this year. So that is 3,100 in total. Okay, so from the 1,350 and 3,000, I take away 3,100 because that is for this current year. So what we have then is €1,250 prepaid at the end of the year. We can also work out that 1,250 by looking at 3,000 and multiplying it by the 5 months prepaid over 12 months total, and that is 1,250. Now, thinking about advertising for the year, what we need to do is say, well, what would advertising paid, so an expense, do to my profit and loss figure? Well, it would reduce my profit figure, so minus 3,100 there. So that is going to reduce my profit figure in the P&L. Then I'm going to think about my rent received. So I want to say to myself, right, how much of this 2,500 relates to this current year? So this 2,500 was 10 months, or okay, 10 months, and 8 of it related to this year. So 2,500 multiplied by 8 over 10 is 2,000. So I take 2,000 of this 2,500 away, that relates to this year. I have 2 months or €500 prepaid then at the end of the year. Now I want to think about, what does this rent receivable do to my profit figure? Well, that is money coming in, which is obviously going to increase my profit figure. So I put 2,000 into my P&L. So overall, I have both minus 3,100 in my assets and minus 3,100 in my liabilities. So moving on then to our August, and we see that a payment of 700 was received from a debtor whose debt had been previously written off and who now wishes to trade with Harris Limited again. This represents 70% of the original debt, and the debtor had undertaken to pay the remainder of the debt in February 2007. So, a payment of 700 received from a debtor. So that is going to go into the bank. So into the bank, 700 going to be reduced because that is a bank overdraft. So we're going to minus it there. So 700 taken from our bank overdraft. Now, that debtor wishes to trade with Harris Limited again. So this 700 is 70%. So 30% that they have promised that they will pay Harris again is going to be added to debtors. So they owe us this much. So we'll add that back onto their account there. Now, the 100%, the €1,000, is bad debt recovered. Bad debt recovered belongs in add operating income in our question 1. So that is money coming in. So that is great news. So that is going to increase our profit and loss balance, if you can imagine that in your trading profit and loss account. So that is August done. The last month that we have to look at is December. So in December, we're looking at our depreciation. So the building's depreciation charge for the year to be 2% of book value. The depreciation charge to be calculated from date of valuation and date of purchase. The total depreciation charge on vehicles for the year was €20,000. Now earlier on, I asked you to underline information about the value of the land. So the value of the land, you were told that in the revaluation month, the month that the revaluation happened, which was in January. So we revalued it, okay, up to 520, all right, but there was land in that of 80,000. Now, 520 by 80,000 by 2% for the whole entire year is 8,800. But then we can't forget about the 300 buildings that were acquired in February when they bought the adjoining business. So plus 300 by 2% by 11 over 12. We don't take out any land there because it was just buildings that were acquired that month. So that is 5,500. So overall then that is 14,300 that we are taking away there from our buildings here. What does 14,300 depreciation do to our profit figure? It reduces it. So profit and loss account minus 14,300. Then we want to do the depreciation charge on vehicles. So depreciation delivery vans minus €20,000 here, and then in the P&L we minus another €20,000 there. So altogether minus 34,300 there for December. So that is everything done there, apart from totaling up your final column, which would make up a balance sheet then at the end of the year. So we're just working across the way like that and totting everything up, and everything should have the exact same number of assets and number of liabilities. So if you want to pause that there and make sure you have all of the correct answers.